The top business stories live from the City of London. Turmoil on the market as President Trump doubles down on his global trade tariffs.
I don't want anything to go down, but sometimes you have to take medicine to fix something.
The FTSE tumbles as fears deepen over the impact of a global trade war. We'll have the latest market reaction. And also this morning, relaxing the rules on electric vehicles as car makers take the biggest dent from the Trump tariffs. Very good morning and welcome to Business Live. We are in the heart of the City of London at Peel Hunt this morning, an investment bank as the world, as investors here in London deal with the market turmoil brought on by the announcement of Donald Trump's tariffs last week. He did say over the weekend that these tariffs are medicine, but there is no cure in sight, of course, for those markets this morning, and no sign that Donald Trump at the moment is going to change his mind. He said on Air Force One over the weekend that unless foreign governments pay back a lot of money, he is not going to change course. And all this at a time in which the markets globally, here in Europe and in Asia, have been battered. In Hong Kong, its stock exchange has seen its biggest one-day fall in nearly 30 years, down 13% today, the biggest since 1997. Elsewhere here in London, the FTSE 100 is also down today. Just around 4% it is down. Among the big fallers are BP, Barclays, Rolls-Royce and the advertising company WPP. It is a similar picture across the main European exchanges, whether it's the DAX in Frankfurt, the CAC in Paris, in Madrid and Milan too, all seeing big falls this morning as investors react to the announcements of those tariffs and the uncertainty that has followed from them. Well, delighted to say that we're joined by Stephen Fine. He is the Chief Executive of Peel Hunt here in the city. A very good morning to you. First of all, it's been another difficult day after the end of another difficult week last week.
Look, we had a predictably unpredictable leader of the free world take a decision that I think everyone was expecting or waiting for. But the severity and the aggressive nature of how and the indiscriminate nature of where they were placed has led to massive uncertainty. And when you get massive uncertainty, you tend to get very defensive, and we've seen this flight to quality, and we've seen this exodus from funds, particularly the US. I think it's worth noting that the US had its worst quarter relative to the rest of the world from January to March, and that's continuing as funds flow out of the US into other safe havens.
And also we're seeing companies that are getting a bit of a battering today are the ones that are most exposed to trade with the United States, car manufacturers, global banks, those high-end fashion chains.
Absolutely. And at the moment, there is a fairly indiscriminate markdown. We're not actually seeing enormous volumes here in London. I think we saw quite an aggressive markdown at the morning, and we're definitely off the lows. Eyes will be on where the US opens. That seems to be off the lowest predictions it had from earlier this morning. But it's that period of uncertainty. You know, what's the right level? What makes sense? Where are fundamentals? When do they come back?
And that's the big question, is that it's uncertainty, not just about the tariffs and the global trade war, which will be a drag clearly, but also about what is President Trump up to here. Is this temporary or is this a permanent rewiring? Is that fair to suggest?
I saw a fairly interesting statistic. I think President Trump assumed that there would be something like a $6 trillion benefit if all the tariffs worked out for the US. If you look at the value lost in the US over the last few days, it's just under $6 trillion. So you're kind of net neutral, but you've upset the world order. The world now has to readjust. The world is clearly readjusting. And it feels to me like other countries are going to come closer together, act as some sort of bulwark against the US. We've already seen opportunities for trade deals. I think the UK have said very clearly we'd like to do trade deals with other countries and other jurisdictions. You just find that new balance over time. So whether these are permanent or temporary, I don't know. As I said before, you've got a predictably unpredictable leader out there who may well do something this afternoon that changes everything back again. But I think there'll be a bit of face-saving needed.
And that's the interesting thing, is that even though, the FTSE is down today, we've had pretty tepid economic growth, and that is going to get even worse over the next year or so, I think, almost certainly, given this uncertainty. But there are upsides for the UK. The UK, do you reckon, might benefit from this somehow?
Well, look, the UK, on virtually all measures, was quite significantly undervalued versus the rest of the world. We'd had aggressive M&A, we've had a derated stock market. And actually, the UK now has the opportunity to stand on its own 2 feet, political stability, rule of law, everything you would want for reasons that a jurisdiction would stand out. And given the undervalued nature of the stock market, I think that's something that will focus a lot of attention. Bear in mind as well, public markets are open. There is always liquidity in public markets, whether they're right or wrong in terms of the price, they're always open. Private markets are shut. LPs wanting their money back, holdings of private companies, that's going to become a bit more of an issue. But I think the UK is an opportunity, given the reform agenda that's taking place here, to really stand out.
And just very finally, it's Monday lunchtime now. What will you and your team be looking for in the hours and days ahead? We're not giving too much away, clearly, but where's your focus on to try to ride out this storm, if you like?
It's a great question. I mean, simply for us, given that we're active in markets and a wholesaler of liquidity, it's like you come into your warehouse on a Monday morning, everything has fallen in value 10, 15, 20%, and you have to trade your way out of it. We've got a team of traders here that know how to trade, understand markets, can recognise sentiment shifts, mood shifts, and we'll be looking at those very carefully. We saw quite aggressive selling or markdowns at the open. It seems to have stabilised, a bit of buying on dips. Who knows what happens when the US opens? Will that be an aggressive sell-off tempered by a sort of a moderation or not? So at the moment, we just have to trade the flows. This is purely a supply-demand environment, and fundamentals aren't key right now. But as we always know, fundamentals come roaring back as things stabilise.
OK, Stephen, thank you very much indeed for your time, the CEO of Peel Hunt, where we are this morning. Thank you for joining us here on Sky News. As we were saying, we heard from the US President over the weekend, in which he seemed to be suggesting that he is not going to change course. President Trump speaking on Air Force One. Let's have a listen in to what he had to say.
I spoke to a lot of leaders, European, Asian, from all over the world. They're dying to make a deal. But I said, we're not going to have deficits with your country. We're not going to do that, because to me a deficit is a loss. We're going to have surpluses, or we're at worst going to be breaking even. What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. I don't want anything to go down, but sometimes you have to take medicine to fix something. And we have such a horrible, we have been treated so badly by other countries because we had stupid leadership that allowed this to happen.
There you go. That was Donald Trump speaking over the weekend. Just in the last couple of minutes, we've also heard from Jamie Dimon, of course, the CEO of JP Morgan. He is saying that these tariffs will boost inflation in the United States and slow an already weakening US economy. Ross Moulds, a friend of the programme from AJ Bell, is with us here. Very good morning to you. What's your reaction about what's going on this morning?
Again, it's a continuation of what we saw last week, and I think the Trump medicine comment, you're going to have to swallow it to make things better later, has definitely gone down badly. I think markets were hoping, with that story from Kevin Hassett, the trade minister, that there are 50 countries coming to America looking for a trade deal. Markets were hoping that would lead to some sort of deal, a concession, and maybe a running back of these tariffs, but the president's comments have dashed those hopes.
It's fascinating, though. This is a man who does change his mind a lot, and there still is an expectation. Stephen was reflecting there. He's an unpredictable character, and in many ways that provides optimism, but is also the thing that is weighing heavily on the people in this room.
Yeah, I mean, we've seen Bill Ackman, a hedge fund manager, pushing back. May not be too many tears shed for a billionaire complaining about how much money he's lost over the past few days, but it's interesting that Senator Grassley, a Republican from Iowa, he's saying that the tariffs were introduced in a way that really isn't necessarily entirely legal, and he wants the Senate and the House of Representatives to have a bigger say in trade policy. So you are seeing some pushback. If that continues, it may be that President Trump does look for some kind of way out, but it will definitely have to be in a way that saves considerable amounts of face if that's the way it plays out.
And one of the first tests actually might come this afternoon. We know that the Israeli Prime Minister is meeting with President Trump. Israel had a 17% tariff imposed last week. If he moves on that will be a reminder to people that he will and can move.
That's the sort of thing that people are looking for. And I think the Japanese Prime Minister Ishiba, he's also looking to fly to the States to try and get a deal as well. So that's the movement that the financial markets are looking for. Some degree of concession, some degree of actually these tariffs are not a permanent fixture, and that something could be done about them going going forward to help stimulate trade flows again.
It is interesting, we've talked a lot about the losers today. There are some winners. Mining stock's not doing great here, but it's doing good elsewhere. A reminder that people will, America's only 13% of global trade. A lot of other trade does happen between other countries elsewhere in the world.
One thing that we've learned is that companies and countries will adapt. They have. We've been through crises before, we've been through recessions before, and if anything, to try and strike a positive tone, those sort of crises actually tend to forge the solutions that lay the platform for future growth. Now, you may think that's Schumpeterian creative destruction, and bad things do happen, but from those bad things, there will be good. That's been the history of the economy for the last 200, 300, 400, 500, 600 years.
Let's talk about us here in the UK and people watching at home. What does this mean for them? I mean, lots of people say, I don't own stocks and shares. Why does this matter? Their pension may well be wrapped up on this. And, it does weigh on the general economy.
It could do. I mean, it can certainly weigh on consumer sentiment to a degree. Those people who were actively trading me, looking at the portfolios, thinking I'm not quite as well off as I thought I was. In terms of pensions, people do probably have exposure to global stock markets, global financial markets. But this is a very, very long-term game, and this storm will pass, as previous storms have done. So best thing to do probably is to switch off the trading screen, keep watching the TV screen and keep informed, and let the world take care of itself.
And just very finally, what about us here in the UK very specifically? We've got political stability at the moment. Stephen was saying we're underpriced or have been underpriced in the past. I mean, is that what you agree with? Could there be a boost here for Britain in maybe the medium term, if not the short term?
I mean, if the UK can strike the odd trade deal, that would be a very positive thing. But in terms of the relative valuations of the US and UK stock markets, as Stephen said, the gap had got to historically extremely high levels. So the UK does look a lot cheaper. It's not as exposed on the downside as the US is, just because expectations for the US were so high. That could be something that plays in the UK's favour. And all those things that people have decried about the UK stock market, not enough tech, bit stodgy, lots of defensives, may actually work in its favour in the current environment.
OK, Russ Mould, as always, a pleasure. Thank you very much indeed for joining us here in the city of London. We're talking about the UK, of course. We have heard from the government today. It's pretty tricky for the British government. We know that they're unlikely at the moment to impose reciprocal tariffs. But are they likely to get any sort of trade deal? It means that the Prime Minister is having to recalculate his entire approach to the British economy. And this morning, we heard from the Transport Secretary, Heidi Alexander, who was talking about this on Sky.
So the imposition of global tariffs and the reciprocal tariffs that some countries have, and retaliatory tariffs that some countries have decided to apply, are bad news for the global economy, because it's bad for global demand, it's bad for prices, and it's bad for consumers. And so that is why we have to do everything that we can to protect the interests of the British people and British businesses.
There you go. That was what Heidi Alexander had to say a little bit earlier on. Well, let's get more on how the UK government is frankly going to have to deal with this uncertainty, and indeed those tariffs. Hasn't been as badly hit as other countries, and most of our trade with the United States is in services and not goods, which has not been affected. But we are a very international economy. That means that we are more exposed than most to the whims of global trade. Delighted to say that we've got Ali Newson, who is Associate Director at NEC Newgate and a former policy advisor to the Business and Trade Secretary. Very good morning to you. First of all, this is tricky for the government because it comes at a time in which the government have put economic growth at the very centre of their existence.
It's certainly lots of things coming together at the moment. We know that the Office of Budget Responsibility has basically said that there's not much fiscal headroom for the Chancellor to play with, and that, full sort of retaliatory tariffs on the US could actually wipe out some of that headroom. So everything is coming together at the most inopportune of times right now.
And what do you think of the government's almost had a pretty laissez-faire approach to all of this, which is kind of sit back, wait and see?
Yeah, I mean, interestingly, I think you mentioned that because the UK is so hyper-exposed in terms of its trade, it's not in a position to sort of really retaliate. It's not being asked by business to retaliate. It is doing some interesting things around what does sort of industrial policy look like. So obviously we've got the announcement of the relaxation of the zero vehicles emission mandate. That's going to sort of reflect how the government can actually support industry, not just through actual subsidy, but using its sort of domestic policy regulatory levers.
Interesting, we just heard from Nigel Farage in the last couple of minutes saying the UK shouldn't retaliate because he reckons with Brexit we can kind of go our own way, if you like, to a degree. Is that fair? People have brought this up quite a lot over the last week or so, that this is a Brexit freedom in the sense that we don't have to go with what the EU has decided to do. Or is that people just using politics to make a silly political argument?
I think it's a bit of both. So ultimately, because we're not in the EU, we are not going to be caught out by EU retaliation. That is absolutely true. Now, ultimately, this was about trade balances and the way that the US calculated who was being hit. So, I think it's a qualified benefit, because even if we don't get hit as hard as the EU, we certainly are so exposed to their supply chains and integrated with them that there is lots of sort of pass-through effects there as well.
Isn't it fascinating, though, that the reason people are concerned is because at least China, and by the sounds of it, the EU are actually up for a bit of a fight, as in, obviously they would both say they don't want to do that, but they both have made it clear that they will reciprocate, and that means a global trade war.
Certainly with some of the biggest sort of economies in the world, looking at that response, it's certainly possible. Now, interestingly, the EU leaders are meeting to decide what does their actual response look like. And I think what we've heard so far is that they want to sort of put on the table retaliatory tariffs, but they want to try and see if they can do a negotiated solution first. So I think, all around the world, countries are figuring out, do they want to try and cut a deal, or do they want to make things worse for themselves?
And just finally in all of this, though, irrespective of what the kind of big decision is in terms of how we deal with the United States, there are calls, and they will only grow, for government to help out British business. We've seen that with manufacturing, with cars, given those imports that are already in place. What do you expect the government to do in that? I mean, they've made an announcement today. We're going to hear from the Prime Minister later on. Are you expecting more of this?
Yeah, I think it's a sort of balancing act between what is actually sort of policy support in terms of regulatory barriers look like. I mean, what levers, what can the government do to actually sort of take down some of the energy costs, for example? You see things like with the logistics industry that the cost of sort of the capacity of the grid doesn't exist there. So can they help energy costs with industry? But also, I think it's ultimately about kind of some level of financial support. And we know the government's done a £2.3 billion package for steel as well. So I think it's a mix between trying to avoid retaliation, get a negotiated settlement, and pull the domestic policy levers that they have as well.
It's fascinating because the government would say on all those levels, whether it's on energy prices, whether it's on an industrial strategy, which we think they may now announce a little bit earlier, they have got plans. And actually, to be fair to them, they do have plans. The problem is the plans that are going to work out in the medium to long term, and people are saying we need a plan now, if you like.
Well, it depends on, I think, what the mix of that plan entails. So if you look at some of the regulatory options that they have, we've seen the relaxation of the zero vehicle emissions mandate. Are there other areas in terms of regulation that's being introduced that could be softened? That's entirely within the government's gift to do. Yes, some of the kind of policy levers to put in place industrial strategy are sort of in the sort of medium term, but I think there's a whole mix of areas that they can look at to take action now.
And just very finally, if you were inside the Biz Department or the Treasury today, or even Number 10, what would your advice be to Rachel Reeves, to Darren Jones, to Keir Starmer?
I think full speed ahead with sort of trade liberalisation. The UK, yes, it's exposed in terms of trade, but that's also an asset. I don't think we have an attitude in this country, unlike perhaps in the US, where we see trade as a bad thing. And we do have an upcoming not only industrial strategy, but a trade strategy. We want to help businesses make the most of those export opportunities. So I think full steam ahead on trade.
Okay, Ali, really appreciate your time this morning. Ali Newsom there. Thank you very much indeed for joining us. As I say, live from the City of London as we continue to cover the fallout from the markets being battered today, not just here in London, but indeed around Europe, in Asia, looking ahead to the US stock markets opening at 2:30 this afternoon. The expectation is they will fall further there. And just to say, I think sterling, by the way, has fallen against the dollar and the euro today. We'll be reflecting on some of that in the market reports just after the break. But don't forget, you can get more on all of this on the Sky News Money blog at anytime. All you need to do is scan the QR code that's on your screen right now. That'll take you through to the Sky News app, and you have continuous coverage throughout the day here on that Money blog of the latest moves in the markets. OK, you're watching Sky News and Business Live with me, Darren McCaffrey. We're going to take a quick break. Up next, we're going to be looking at the car industry in particular, as the Prime Minister announces that he is going to make some changes to the EV market to help out car manufacturers. We'll have all the details after this break. Stay tuned.
I'm David Blevins, and I'm Sky's Senior Ireland Correspondent.
It takes 60 minutes to cross the Irish Sea. It took the British monarchy a century.
I've spent 30 years reporting the journey from conflict to peace.
The political parties of Northern Ireland have reached agreement.
If there's anyone who might know how to fix Northern Ireland's devolved government, it's the American architect.
Changes in circumstance require changes in approach.
The end of the political stalemate, the start of a new chapter for Northern Ireland.
I confirm that I am willing to take up the office of First Minister. My election to the post of First Minister demonstrates the change that's happening on this island.
Catholics and Protestants on different sides, now facing the same threat.
If we both contract COVID-19 and end up in hospital, religion's nothing.
People here are adept at finding hope amid adversity. That's the spirit of a place that punches way above its weight. We help you understand the world with us. A toxic blue-green algae now poisoning Lough Neagh. It's breaking your heart what has happened here.
It is.
This is a vital resource, a national treasure, now fighting for its very life. They are effectively surrounded by Northern Ireland, and that makes this the most unlikely of international frontiers.
If there's a hard border, I think it'll cripple the country.
Winter is coming. Welcome to Winterfell. It's an iconic location in this globally acclaimed drama. Ophelia was the most powerful hurricane this far east in the Atlantic on record. Sky News, the full story first.
Sky News get the full story first.
Is this now all your territory?
Yeah. The battlefield is outside the barricades. We are in the middle of a forest, in a jungle really, and they're attempting to keep these men alive. I'm Stuart Ramsey, and I'm Sky's chief correspondent. It's really dangerous. Many people have died riding it.
1,500 movies. I don't want this flight to end. Fly Emirates, fly better.
Very welcome back to Sky News and to Business Live. We are... Oh, it would help if I had my mic with me. There you go. Welcome. I'll start that again. Welcome back to Business Live here on Sky News. We're live in the City of London, covering, of course, the market turmoil today. And we've been talking just before the break about what the British government would do in reaction to all of this to try and mitigate the impact it's going to have on business, no more so than the car industry, which clearly already has tariffs imposed on it. Many of those high-end car manufacturers here in the UK that sell to the United States is their second biggest market. Well, the Prime Minister is saying that he's going to change some of the rules around electric vehicles ahead of 2030. That has been welcomed largely by the car industry. We haven't got the details yet, though, and we are expecting to hear from Keir Starmer later on this afternoon. We're delighted to say I'm joined by Vicky Reid. She's Chief Executive of Charge UK, who are in charge of the charge points, if you like, for electric cars. I think first thing, Vicky, is what do you understand from what you think the Prime Minister is going to say today?
So I think it's very clear that the future for the car industry is electric, and that's good news because that's going to deliver jobs, all important, growth and clean air. But of course, we can't just deliver this transition with EVs alone. We need charging as well, and lots of chargers, and that's where we come into things. And I think what we've got today is some clarity in terms of the headlines. We've been flip-flopping on the date for a long time. Is it 2030? Is it 2035? That is now settled today. That's good. But actually, as the details are emerging today, we're a little bit concerned from our point of view about there's got a lot of devil in those details, and we're trying to unpick what that means. But unpredictability is not, of course, good from a charging investment point of view.
In saying that, I mean, this is not... This is the government, they would argue, helping out car manufacturers. Shouldn't, in essence, the drive, no pun intended, to the electric vehicle kind of industry be more consumer-led? At the moment, it feels kind of the people are being shoveled along by government targets.
Yeah, absolutely. This needs to be both regulatory-led, because we're trying to push and move something to try and meet our net zero targets, but it also needs to be pulled by the consumer. And that's the bit which is missing today, actually. We've got some reassuring headlines about the 2030 date and the headline EV sales targets. We've got a lot of detail about the regulation underneath, which we're concerned about. But what's missing, what we've been promised, is the demand package. Actually, that's where the car industry and the charging industry are actually aligned. We need reasons for people to switch. These are great cars. The charging experience is improving. Rollout is increasing all the time. But people need to have reassurance that this is the right thing to do, and there's very little in there about that at the moment.
Do you fear that this is now a slippery slope, actually, the targets, if things become more and more tricky, will just get pushed back and back?
Yeah, that is a concern. I think we'll be speaking to the government today and throughout the week to try and get that reassurance. We've been talking about a package of regulation on one side and demand measures on the other. We need to see that package of demand measures really quite quickly. And from our point of view, that means help for us to make charging affordable, VAT reduced, some of the expenses we're having to cope with that are pushing prices up, like standing charges, high electricity costs, they can be dealt with, and also improvements to make sure that the charging that is there is seen. So we need some help on signage, for example.
OK, Vicky, really appreciate your time this morning. Vicky Reid there, who's the Chief Executive of Charge UK, people who obviously have charge points all around the country. Well, that is it from me on a Business Live for this morning. It has been quite a morning in terms of the markets, record falls in certain parts of Asia, which is more exposed to Donald Trump's tariffs than any other part of the world. But here in Europe too, whether that is in Germany, France, or indeed the FTSE 100. And we are only a couple of hours away from the US market opening, again with the expectation that they will continue to be battered today, with no sign that President Trump is willing to give ground on these tariffs. We will have continuing coverage throughout the day here on Sky News. Jane Secker is up next at the top of the hour. I'll be back live from the City of London at 4:30 this afternoon. Do join me then if you can. Until then, have a good afternoon, and I'll see you later. Bye-bye.